Let's now turn to AI, and where Collins Street Management is seeing opportunities in this space. Rob Hay is joining us from Collins Street Asset Management. Rob, welcome back. Good to see you.
Likewise.
AI. Now, look, I mean, this has just dominated Wall Street, hasn't it? Obviously, with the mega cap tech stocks. Are you looking at Wall Street as well as locally? What do you got your eye on at the moment?
Absolutely, Andrew. AI, as far back as 2018, was described as being more transformative to the human race than fire or electricity. And if we have a look at some of the recent reports that have come out, we can see AI forecast to be 25 times more than what it was in 2023 to a $5 trillion industry by 2033. So the opportunity there is huge. For us as value investors, Andrew, and particularly focusing on it from an ASX point of view, it really does provoke a lot of questions as to whether or not getting exposure to AI is something that you should do on a standalone basis, recognising that the AI sector is made up of a lot of subsectors, be they data centres, chips and so forth. Or if there's a more compelling and potentially cheaper way to gain access via those standalone companies that are using AI in a very cautious but pragmatic way in order to enhance their business models.
So you're of the view that we're only just getting going. This is a revolution, perhaps the fourth industrial revolution, if you want to put it in those terms, just starting. Still a potential, you say, what to get on the ground floor. Where are you looking locally then?
For us as value investors, we're seeking to find companies that are worth $1 that we can buy for 50 cents. Not for those companies which are at $1 that might grow to $2, $3 and so on over time. What we've found, which is really exciting and fascinating for us, are a selection of companies on the ASX that are using AI in a very cautious and pragmatic way in order to build out their business model and support future returns. And Andrew, I think there'd be 5 examples I'd call of that. We've got the likes of 7 West Media, who through their 7 Plus app are able to collect data on their viewers in a whole range of different ways, such that they can better target their marketing spend, better engage with their audiences, get more retention, so forth within their channel. We've seen the likes of Hum Financial Group, for example.
Just before we get to that, can I take you back to 7 West Media? Now, of course,
Yes.
This comes in the news that it's doing that tie-up with Southern Cross. What are you making of that?
Yeah, we're working through that at the moment and spending a lot of time with management and our analysts are looking quite closely. Prima facie, it's really interesting, Andrew, particularly when you have a look at how the dividend from the other company is coming into the fold and what that might mean for 7 West, because they still have a good $280 million worth of debt, and if some of that money can be used to pay that down, that could really put a rocket under things. But it provides a lot of opportunity for the company, no two ways about it.
Is that because you really do need scale here in the local market if you're in media?
Scale is absolutely important. Of course, you don't want to buy scale simply for the sake of it as well. You want to make sure that it's complementary to what you're doing and that it does support sensible capital management decisions as you go through.
Now, you were mentioning Hum. What are you seeing there?
Now, Hum as a company are also quite fascinating, and they're using AI not so much as a sword to drive new revenue growth, because naturally we have credit laws in Australia that prohibit certain behaviours, but they are able to use it to manage their expense and outgoings a lot more carefully. And so they've developed an AI assistant which is able to field a good 50% of inbound queries, thus saving a lot of money at their back end with customer servicing and the like, but also enhancing the customer experience as well. And so where AI can be used, say for example with 7 West as a sword, in terms of driving new revenue growth, getting a higher premium for your marketing spend and so forth, other companies are able to use it at the other side as well, to improve the jaws of their earnings by focusing on that expense line and really getting some good cost out efficiencies.
Now, of course, AI integration, the spend there doesn't come without risks, so what are you watching for?
That's very, very true, Andrew. The greatest mistakes and stuff-ups of humankind have been achieved with teamwork, particularly where there are issues of FOMO and the idea that perhaps everyone has to jump on the bandwagon. And so with artificial intelligence, you have to be very careful to understand what conflicts of interest might occur, particularly within those algorithms that are looking to sell, potentially even in things like newsfeed, those types of things, how it might be skewing certain behaviours. you also have to have a very clear understanding of what potential regulatory risks you might be finding as well. Because innovation precedes regulation, and whilst there's a lot of good ideas and upside there in the AI space, we might see some counter forces from government coming in over time which might curtail the way in which it is used. There are some other issues as well around potential depreciation of AI assets and useful life and those sorts of things. But I think the key thing, Andrew, that I'd call out here for investors is to understand where AI has a place in a business. Computers and machine learning are fast, they're brilliant and efficient, but they lack that human creativity, flair and entrepreneurialism, which can really drive returns and think outside the box. And a quote from Pablo Picasso is to learn the rules like a pro so you can break them like an artist.
Yeah, that's not a bad way of looking at what's going on right now. Rob, terrific to get your view. Thanks for joining us at Collins Street Asset Management.
Thank you.